afternoon, everybody. Welcome to TraderMerlin. It is your Monday edition. Do I look sunburned? There was no sun out where I was at. What a great weekend up in the mountains. Did 2 days of snowboarding, and man, I tell you, the older you get, the harder it is to get up out of 2 feet of fresh powder. It was a fantastic day, so thank you guys for letting me have a Friday off. It was good to get away and have some fun with some friends. And I did post a picture. I did post a video actually on my my Twitter feed of the snowstorm as it was coming. It was great. Loved it. Anyway, let's dive into our markets because there was some fun stuff to talk about, and we have more to talk about for tomorrow, right at the end of the show. So I'll start things off with the graphic for today, which says higher oil ahead. And the reason I started with this topic is I've received a couple questions pertaining to my comments at the end of last year and also the beginning of this year, to which I say I think that the most critical component of our market, at least overall picture for our market, is not the U.S. dollar, it's not necessarily the bond yields, it's crude oil. And that is because it's one of the major drivers of inflation, and because oil drops so much, it due for a rally back up. Oil's not going away. And I received a couple people didn't like my view, didn't understand where I was coming from, and that's fine. You don't have to agree with everything that everybody says. That's great. But I brought up two questions here. One was from Tam that says, won't EV cars cause the price of oil to drop, is the first one. And the second one is from Scott, says, you have said you're bullish on oil. Why? What are you looking at? Okay, so let me cover all those and get Tam's comment covered as well. So while we are seeing so many EVs, on the roads becoming much more popular, I haven't seen the documentation or studies yet. It'd be interesting to see what dent it is actually making in the price of crude oil and on oil over time. Now, I don't think that you're wrong, Tam. I'm not saying that you're wrong that EVs won't eat up some of that market share. Will it cause the price of oil to drop independently? I'm going to say no at this point. I don't think that it's that major of a factor to say, it's going to cause oil's price to decline, because as more people use, electric vehicles, that, they're not going to use oil. Well, what's funny is you've seen some, at least I've seen them, driving north from Southern California to Northern California at one of the major Tesla supercharger stations. It's a big diesel generator running off of petroleum products. These are... It depends on how that energy is being created. Yes, you're using alternative energy, but in some cases it's using other resources that might be even worse. So just because people are using EV, I don't think is the cause for oil prices to drop. And more importantly, it's going to be the oil producers, so OPEC and OPEC Plus, and the supply coming onto the marketplace. So you're looking at the EV space as the demand for the crude oil, but I don't think it's going to be that detrimental just yet. Now, maybe in the next 20 years, when we see more and more push, more and more infrastructure for electric vehicles, that might start to take a ding. But you also have to remember that crude oil itself is a finite resource. There's only so much oil on this earth. There's only so much compressed dinosaur bones and organic material that's turned into oil over the centuries. So I know Pepe totally defeats the purpose. It cracks me up. So there's, when I went to Dubai, I think I went to Dubai in 2006 or 7. It was booming, but still relatively small compared to where it is today. It really is just blown up in the past 20 years, 30 years really. And I went through the historical part of town. It was basically just a small little village. And now it's this booming metropolis that is a tax safe haven. A lot of people love to go there. In doing one of the tours, I was talking to one of the tour guides and asked him about the oil industry, and he says, it was kind of funny, I think the king is Muhammad Al Maktoum. I believe that's who it is. I forget, there's so many different names that hard to pronounce and remember. But this guy was edifying the king and saying, what a brilliant man, because they know that their oil is going to run out in 50 years, that they'll have no more oil in Dubai to sell or extract from the ground. They've kind of calculated that out now. I'm skeptical on those types of calculations. But if there's only so much oil in Saudi Arabia, only so much oil in the Permian Basin in the U.S., if there's only so much oil in different regions of the world, it's being consumed, not just by vehicles, but all sorts of other petroleum products that use oil. I don't think our dependency on plastic is going to diminish anytime soon. So while EV TAM is a component which would maybe decline the demand for oil a little bit, I don't think it's going to be that impactful given our robust demand for oil in so many other areas. The thing that I think is going to impact it the most is the supply and demand equation. Now, if the OPEC members, which you guys have seen this recently, OPEC last year, said they're cutting production. And of course, the U.S. market's like, oh, OPEC, oh, no. Well, let's be honest, we're the largest producer of oil in the world. So realistically, we could just turn to everybody and just go, we got enough oil here. We don't need to touch Saudi Arabia. We don't need to touch Russia. We don't need to touch Venezuela. We will just do it all ourselves. That might be an interesting proposition, but apparently it doesn't work that way. You have to send your oil to other countries and get in battles with them over it. Anyway, with OPEC holding until June, so they have these cuts in place until June, and some of the recent meeting minutes have alluded to the fact that there's no intent on them increasing production, but maybe even cutting yet again. Because I brought up the point, if I'm an oil-producing country, let's say I'm, let's say I'm Kuwait, and I know I've got a certain amount of oil in that ground, and when that oil runs out, I have no more money coming in. I need to find other ways. And Dubai was brilliant because Dubai's king said, we'll create a whole city and infrastructure and get people to come to the city as opposed to just relying on our oil forever. So when the oil dries up in Dubai, they've got this big city that's been paid for by all of it, and tourism and all sorts of other things. Very smart move. Other places are still relying on that oil. And if you have a finite amount of anything, your goal is to sell it for the highest price possible so you can make as much money as possible. So did I say Ecuador? I meant Venezuela. I thought I said Venezuela, Margaret. In this situation, it's in everybody who's in OPEC's interest to sell oil at the highest price possible. So let's go take a peek at that price of oil right now. That's Bitcoin's chart there. We'll go up to CL. And, the chart doesn't look that great. It has really just been kind of depressed from its 2022 highs, but now it feels like it's starting to make some nice moves up. We've talked about this uptrend. It broke out of this little supply area right around 79.38 was the number, and now we're up at 81, call it $82. This looks like it's going to continue and keep on pushing up. And again, the trend is your friend till the bend at the end. So to, was it Scott's question here, you're bullish on oil. Why? What are you looking at? Well, number one, I'm looking at the trend. So I could put in as much macroeconomic thinking. I could study OPEC. I could study Russia and Ukraine, what the impacts of the attacks on the Russian pipelines are having for supply for the global. That's all extra icing on the cake. Just look at the trend. Right? At this point, Scott, I believe that oil is going up because that trend is up. We could put up any indicator you want on here. It's going to tell you that the trend is up, certainly since the December of last year. Higher highs, higher lows. Put any moving average you want on here. All right, you guys want to put an 8-period moving average? It's probably above that as well. But who would go that small? Other than Brandon Wendell. He likes the 8-period moving average. So everything right here from a technical perspective, Scott, is telling me it's going higher. The second component of it would be the fundamentals, right? You've got that old school battle between technical analysis and fundamental analysis. The technicals right now say looking pretty good, specifically on the short term to intermediate. Long term, crude oil looks like it's been just kind of chopping, going sideways. So I'm focusing on the intermediate and the shorter term, that trend reversing. It may become a bigger uptrend. And of course, every time this ticks higher like this, all those OPEC members get really, really happy because every barrel they sell, they're selling at higher prices. Now, one thing I'm not sure of is we had Bill Addis on the program last week, and he was talking about the oil producers like Saudi Arabia accepting payments for their oil in currencies other than dollars. Now, I'm not sure what impact that may have on the price of oil. Certainly, it would have an impact on the U.S. dollar because now there's less dependency on it, but not sure how that plays into the trajectory of the price of oil as they accept different payments for oil. All right, so to Scott's point, what am I looking at? Technically, I'm looking at that chart, and that chart says go long. Fundamentally, I'm looking at, I know that supply is limited, supply is fixed. And granted, we're not going to run out this year, next year, maybe the next 5 years, but every day it gets a little bit smaller, the amount of supply of oil, which is, again, is why I think alternative energy is not a bad play if you find the right companies, the right sectors, and the right products. As volume and demand drops, the economy of scale will drive up pricing. Well, typically, it will. With oil, it's tricky to say that one thing is going to cause another. I mentioned last year that I thought oil was going to be rise. I think it was last year when we started this whole invasion when Russia started the invasion of the Ukraine. I felt like we'd start to see oil prices rise, and they did. If we look back at the Israel conflict with Hamas, when all that started, when all that happened, I was really thinking we were going to surge, because now you're bringing in very volatile countries, we'll say, into a long-standing battle. And you might bring the U.S. and other countries in there, and that could make something much more extreme, which I think could have had a significant impact. It really didn't have the impact I was looking for. I actually thought it would be much more severe to the upside. However, the standoffish approach from a fundamental perspective of OPEC and OPEC Plus and our wonderfully friendly and amicable relationship with Russia would lead me to believe that from a fundamental perspective that oil prices are going to surge. Now, keep in mind, summer months we start to see demand for oil increase, not only for airlines, but also for those of us who like to travel around during the summertime in the wonderful United States. We got so much to see. Let's drive and check it out. Well, with that kind of demand, if oil supply stays the same or maybe even gets cut, increased demand, you're going to see surges going on in the price of oil. So those are the main reasons, Scott and Tam, why I'm bullish on oil. Anything can happen. It could go any direction. Who knows? But at this point, I'd say your probability is higher of going long on oil based off the technicals and the fundamentals. All right, let me go to some of the comments here. Andre says, is oil catching up with gold? Well, it's kind of say catching up. We're talking price-wise or trend. They're very different instruments, right? Gold is that flight to security. Oil is just mass consumption, right? We're using oil left and right. So I don't know if I could even put them in the same ballpark as far as commodities. Well, certainly they're extracted from the ground, we could say, but that's pretty much the only similarity I see. Is it catching up with gold in terms of popularity? I don't know. I still think they're very different assets, very different purposes, and I couldn't put those two together. Let's see what else I got here. I remember when I was in middle school, Pepe says, in the 1990s, my science teacher told us that we would run out of oil by the mid-2025s. Yeah, look, I don't think I don't think we're going to run out in the next decade, but, you get 20, 30 years. I don't know. Do we have a Mad Max type of scenario? Maybe. I think by that point, we're having a little bit more foresight as a global community and realizing that this incredibly utilized resource is getting smaller and smaller and smaller. So let's find alternatives that we can use. And that's why I think you've seen such a boom in things like solar and wind, hydroelectric, different ways to generate power. Who knows? Maybe we'll have your car will have a mini nuclear reactor in it, so we don't have to use petroleum products at some point in the road. How does one trade lithium or energy storage elements? Great question, Scott. That I don't know the specific names, but I do know that there are lithium companies you can buy into. Larry actually had a couple that he was really bullish on. I can't remember the names of those ones, unfortunately. There are some battery type companies. So you could go, there's different ETFs for the electric vehicle space. Some are actual car makers. Others are the components like the charging stations, lithium, rare earth miners can be in some of those portfolios. So I would say, look at, if you really were looking at lithium, you could do some research, find out the major lithium miners. And personally, I would not take the chance on buying just one or two lithium companies. I'd rather find a portfolio of them because I don't know enough personally, and some of you probably far more knowledgeable about lithium than I am, but I don't know enough to look at those companies and make an educated decision as to buy this one versus another one based off of my knowledge of their business. I don't know. If I was going to look at price charts, sure. But I think as a risk management tool, anytime you get into a sector or a market that you're not quite comfortable with, best thing to do is go with something that's diversified and spread that risk around a bunch of different companies within that same sector or industry. When I was in college in the 70s, the same thing was looming 50 years later. Yeah. What was it? Didn't Bob Dole, didn't he say the world's going to cook and global warmings and increased temperatures by some, everyone can have these forecasts and prognostications about the future, but I think you would all agree, and maybe you don't. If you guys disagree, type in the chat, I'm curious. The statement would be that at some point, the world will run out of oil. I think that's true or not. And those who say that don't think we'll run out of oil, you're calculating that there's enough quote-unquote organic matter in this earth continually converting itself into oil, which from my understanding takes a very long period of time to turn it into oil, the rate at which we're consuming it, that the earth is actually creating more than we are consuming it, then we'll never run out. But it seems to me like will run out of oil. PG is getting raided by the Homeland Security. Yeah, right now. Yeah, he's getting he's in trouble. P. Diddy. Oh man, P. Diddy. Is it Mike says run out in 300 years? So Ellen, you don't think we'll ever run out of oil? I'm not saying in your lifetime, but I mean collectively. Like I think Mike, you're probably right. It might be 100, 200 years. But we don't have to run out of oil for it to surge in price, right? As certain countries, let's say Dubai, from when I was over there, they said they're going to run out in 50 years. That was back in 2005, maybe 2006, somewhere in there. So by that rationale, they'll be done with oil in Dubai by 2055, somewhere in that ballpark. They're not a major producer of oil. However, there are, like Saudi Arabia, right? As supplies start to dwindle, their barrel per day of output will diminish. And if demand continues to increase and we see just a slight decrease in supply, then of course price is going to be going up. Now we're talking long-term trajectory. I always make the statement, which is a true statement, that the markets are built to go up over time. Markets are designed to go up by how they're calculated. But that same rationale, if everything remains constant as it is today, then the price of oil is designed to go up over time because you're depleting that resource from Earth, and the more you deplete it, the more it's going to go up in value. Assuming that we still need it, right? If we change our preferences, if we change our consumption patterns and we no longer need this stuff, then it could drop in price. So there's always that balance there. Liz says, true, but not in our lifetime. We will never run out of natural gas or oil. Yeah, natural gas, I think, is produced much faster, if I'm not mistaken. I mean, I lived out near some farms. Pretty sure natural gas can happen pretty dang quick. We'll love methane. We will run out of oil one day. Yeah, I'm pretty sure I will be long gone by the time we run out. But I think the point I'm making is, over time, the supply being extracted from the ground will slowly start to drift lower, unless we change our consumption patterns. Let's see. We have enough oil in the Gulf of Mexico and Venezuela. Yeah, we got plenty for your and my lifetime, Chio. As more nations become industrialized, I think it's possible we run out. Okay, Venezuela has got oil revenue reserves for 100 years approximately. We have to transition from oil to gas. Yeah. Dubai is changing their economy strategy by getting out of the oil industry and a leader. Yes, exactly. But see, that's why hats off to the leaders and the business acumen over there in Dubai, is they know that it's running out. So you take this resource, you make as much money as you can, and you build skyscrapers. And then you tell the world, tax haven, no taxes for you guys. Come on over and do business in Dubai. We got all these great apartments and everything you need's here. We'll build an oasis in the middle of the desert for you. And it's worked. I don't know if anybody in here has been to Dubai. It's a pretty amazing place, man. There's a lot of head-turning architecture and just pretty amazing pieces there that were built out of sand off of oil, because they know they want to be an industry leader in other things. They want to be one of the cryptocurrency hubs of the world, was one of their plans for a while back. The planet Earth is no longer making oil. I think it is less. I think it is. Just, it's such a slow process that it takes so long to do it. Let's see. One class also said we are heading into global cooling. Yeah, I know. That's true. And again, what do you know? I don't know. We can all have an opinion on global warming, global heating, I think climate change. Personally, I'm in the climate change. I think we are seeing patterns as the Earth's crust cools and hardens. Things are changing. I mean, look, I had one of the wettest winters in Southern California I've ever seen, and I know other people have experienced very different patterns in their regional areas. All right. Let's see. Dubai is too hot for me too. Funny story. So I was teaching a class for Online Trading Academy in Dubai, and it's a really weird hours of the day, but anyway, I asked the class, you guys want to see, I go, do you want to see, some live examples of this with real money? Because I had some trades on my laptop. And they're like, yeah. So, all right, let's take a break. I'm going to run to my room, which was, half a mile away in this education village, knowledge village, what they called it. And I sprinted down there and I grabbed my laptop out of my room, which is nice and climatized and air conditioned. And I run out and I'm sprinting to get to this class. And it's hot. I mean, it is ridiculously hot out there. I mean, there's a reason nothing grows in sand. It's hot. And I finally walk into the classroom and I go to open my laptop and there's literally water running out of the laptop, and it fried my laptop. there was so much condensation from the electrical components when I left my hotel room, fried my computer. So no example there. For example, the oil came from dinosaurs. Myth was debunked. Yeah, I don't think it's dinosaurs. I think it's organic matter. I didn't say dinosaurs. Organic matter. I think it's not. I think it's all sorts of different elements, but just compressed over time under the Earth's crust. I think that's where it comes from. But who knows? Maybe there's some guys just making oil in his backyard. Who knows? Yeah, but I agree with you, Pepe. Way too hot. I would never want to live there. Never. Even if you gave me, you guys doing well at trading, you can move to Dubai and pay no taxes on your trading gains. That might be worth going. The oil today was produced from the large amount of plants that died about 300 million years ago. You're right. And I think that there still probably could be some being created from plant matter, right? Maybe not necessarily 300 million years ago, but I would say there's probably minuscule amounts being created of new oil. That said, our consumption far exceeds what's being created. All right. So there's my thought on crude oil. Now, what does that mean? Does that mean that this thing's going to go up to $500 a barrel by the end of the year? Hell no. Do we see oil maybe getting up to 95 by the end of the year? Yeah, I think that's definitely possible. If OPEC continues to play hardball, and their meeting comes up in June, I believe, if at that meeting the OPEC members and OPEC Plus say we're keeping cuts right where they are, and we're not going to do anything, no changes to the production, then you're going to see oil continue to drift higher. If they say that they're going to increase production and alleviate some of the pressure for summer, because of course what will happen here is a political stunt, which happens all the time. This is not saying anything about this current administration or any of the past ones. It's always the case that this administration will put pressure on OPEC to increase production, most likely at that June meeting. So as you get to July, September, October, November, I think I forgot a month, you will start to see oil prices sell off a little bit, and then the current administration can say, see guys, we got oil under control, and we fought inflation, right? That will probably be the only major change that would cause these OPEC members to go, we'll increase production to alleviate the price, and what are you going to do for us, right? We'll probably send them a bunch of money to cause them to increase production. Now, if they play hardball or tensions continue on with Middle East countries and Russia, they could cut production even more and really surge, but I think they'll probably stay right where they're at. I'm not paying taxes on my gains now because I traded in 3 Roth IRAs accounting. Nice. Get on that Roth there. Get on those IRAs, all right? Tax exempt. Most of the expats leave Dubai for the summer and then return when it's cooler. Yeah, I couldn't live that summer there. It was 105 when I was there, which is like Arizona can get to 105, but there's a different heat there. That's a crippling, painful heat in Dubai. Let's see. If nuclear fusion is implemented, then oil could become irrelevant. Not irrelevant, because nuclear fusion is not going to make plastics for you. You need petroleum products for plastics. But as far as an energy production source, absolutely. You're right, Ricardo. It could definitely take a big dent. I mean, if we had nuclear fusion implemented and we got it was all going, then, where's oil going to go? Do you see its value drop in half? Possibly. If we find different ways, I know Pepe was laughing about my comment, my comment in earlier on about putting a mini nuclear reactor in a car. We've got them in submarines. Why can't you take this a tiny little mini nuclear reactor for your car? Why not? I don't know. Stranger things have happened. Or, what if they come up with a design? My friend from Amsterdam, he's an investor in an Israeli company that as a water-powered engine. You literally pour water in it, and it takes that and somehow converts that to energy. That could totally disrupt the oil industry. But I don't think it's going to go away. And if consumption of all this stuff stays the same, then we'll probably see the price of oil drift higher and higher and higher. Anyway, that was my comment to Tam and to Scott. So that's why I'm bullish on it. Until those factors change, Scott, I'm still going to be bullish. Again, from the technical side, I am looking at higher highs, higher lows of the shorter term intermediate trend. If that continues on, great. I'm also looking fundamentally because of OPEC and how OPEC is positioning themselves right now. So there we go. Scott says, wouldn't it be nice to be self-sufficient? Yes, it would. I've never quite understood, and I know it's all political, I know it's macroeconomic and stuff, but if we were one of the largest producers of natural gas, then why do we need to export it? Why don't we just use it? If we're one of the largest producers of oil, why do we export our oil? Why do we have to import? There's no need to import from anybody if you just use all the stuff you have. But we export our oil and then we have to import at the same time. That just seems kind of stupid. It's like, hey, I need to borrow $10 from you. Okay, so I've got $10, but I still borrow it anyway. I'll just use my $10. I'm paying interest on your $10. Anyway. All right, let me go to another topic here. Questlock on the YouTube channel sent this one in, so thank you, Questlock, for that one. And again, I try to get everybody's questions answered. I know some of you get frustrated when I don't bring up yours, but I'm sorry. I got a lot of stuff going on here. What effect is the China ban going to affect the markets? Apple, Alphabet, AMD, Microsoft, or Meta, Intel? Well, first off, this has been something that's been going on for a long time. This is not like a brand new thing that's happened in China and they're playing hardball. This is tit for tat. We have been going after China and putting embargoes on certain things and tariffs on certain things, banning certain technologies. We're not allowing NVIDIA to send them certain chips. So this battle back and forth has been going on for some time, and I think that this latest move by China is in response to us limiting certain semiconductors and chip technology going to China, and also the U.S.'s stance on TikTok and continually going after TikTok because it's spying on people. Now, China, and hey, I'll be honest, if I was China, I don't see this as being a bad thing either, because these are all American companies that got mentioned in this document. This is back in December, but it's going to be implemented here soon, which is Intel and AMD devices will no longer be allowed to be on any government device. Also in that was Microsoft, right? So this is China saying, we don't trust your technology. Your technology is spying on us through back doors or whatever, and maybe getting into intellectual property and our secrets as a government. I think the United States has been saying the same thing about every product that comes from China as long as I've been alive. Oh, yeah, we can't have that in a government office because that's spying, and TikTok's spying on Americans and it's looking at all your pictures and your emails and all that stuff. Probably is. But I'm pretty sure that there's other resources and ways that we're spying on China and other ways and resources that China is spying on us. So for Questlock here, what impact is it going to have on them? I don't think it's going to be that dramatic. This is just for government computers. Now, if China said we're banning all AMD, Intel, and Microsoft products in China, then you'd see a pretty significant decline. This is just government agencies. I don't think it'll be that significant. And if I was China, I probably would have done this a long time ago. I think that part of the reason this is being done is to promote and encourage companies in my home country, let's call it China, let's say I'm Chinese, in China to make the same types of software better. So I can now rely on my native country's software as opposed to going and using foreigner software, which of course makes sense. So as far as what's going to happen, Questlock, I don't think it's going to be that big of a deal. Let's take a peek at some of the price charts here just to see what's been happening. Let me get rid of these moving averages because I don't like them on my chart. So mentioning that was AMD. All right, so AMD been doing fantastic, going all the way back into late 2022. Although most recently you see a little bit of a sell-off here from its peak to where it's at now, roughly 23% slide. So for anybody who's getting excited about AMD and them entering into the fray of AI computing chips, which they've talked about, might be a nice buy point up at some point here. Now, Intel. That news caused a little bit of a drop in Intel today. It was only down 1.74%. Not too bad. If you go back to its peak, which is a little bit earlier on, back in December of 2023, to where it closed at today, you're looking at down about 18%. Now, the big one here, which it's funny because everybody I talked to today was saying Intel, AMD, Intel, AMD, Intel, AMD. Oh my gosh, sky is falling. Microsoft is pretty damn big as well, and Microsoft is also part of this. Now, they didn't take much of a hit. They didn't take as much of a hit today. Again, until these patterns change on things like the NASDAQ, the S&P, Microsoft, your bias still has to be to the upside. So I would not let this China news freak you out. I don't think it would necessarily warrant going short any of these. Certainly not going short Microsoft at current levels. Just look at the price chart here. It tells you it's strong, and if it does have a little pullback, it's part of the greater uptrend. Now, as far as shorting Intel, I think you already missed that mark. Today we dipped down below this 41.24 mark. I'll put a little horizontal line on here, which is the low point going all the way back. Oh, hold on. That's not horizontal. It's a trend line. 1 second here as I bring this one up for you. All right. If you look at that line right there, 41.18, we gapped down below that today and rallied back up, which I guess is great. Still down 1.74% on the day. I would have looked to have been a buyer at that 41.18 mark. Other than that, you'd have to go find some demand zones, something a little bit further down, and I don't see anything here that really just jumps off the chart at me. I don't see anything here on Intel that says buy it. So once you get past this 41.18. So with that said, it's a case of shorting the rallies here at some other supply zone right around maybe 42.50. But the chart, at least since December of last year, lower lows, lower highs for Intel. Now, AMD, different story. Right, AMD has been on a pretty pronounced uptrend since November of last year, actually late October, when the whole market rallied. Now, it's having a pullback now. Where might that bottom point be for this pullback? For me, it's going to be right around this 162.74. So if you're looking at buying into AMD, looking at that longer-term trend, or at least the intermediate trend since October of last year, then that 162.74 mark is probably a decent buy point. Question you're probably wondering, Questlock, is does this escalate? Where does it go from here? Who knows? There may be a retaliation on the part of the United States. And maybe they do something else towards China. And this kind of tit for tat will escalate and escalate and escalate. Who knows? Obviously, it'd be nice to figure out some way to resolve it amicably and let everybody just do business. But, as long as I've been alive, there's always been some villain out there. It's either Russia or China or Iran, and who knows, we'll make it some other villain down the road when we run out of villains to go after. So at this point, it's about spying. It's about AMD, Intel, and Microsoft. Personally, I don't think it's that big of a deal. It's just government agencies. Now, again, if they say that this will be over all of China, then there's going to be a real issue. But that's a much more impactful step that has not come to fruition yet. All right, Dave. Our refineries are not tooled to refine our oil. It costs billions to retool. Yes. The question I'd have there is, if it does cost billions to retool, yet we're spending billions to send our oil to somebody else to refine it, where's that trade-off, right? At some point, can't we just spend the money, do it all here? Dave probably works in the industry. We are capable of refining heavy sulfur crude, which we purchase for a cheap cost, and we refine it in bulk for lower cost because of our mass consumption. In turn, the U.S. sells our lower sulfur crude for a higher price to countries that cannot refine the bulk like we do, thus creating global commerce. All right, great answer, Dave. Like a school report right there. Thank you. Yeah, I know that there's all kinds of different grades and qualities of oil, but I'm not in the refining industry, so thank you for that, man. Appreciate that. Let's see. Sounds good. Oh, you're right here, Questlock. Good to see you. All right, let me go into markets for today just so we can take a peek at that. I want to make sure I get through everything before we wrap up here for today. As far as your dollar index goes, I got nothing to say. It's been just chopping sideways again until it breaks above that almost 105 mark that we saw established back in February. I really got nothing to say about it. So let's put some lines here so I can just stop even bringing it up. I'm going to put it down here where I see all these tails. And this is very subjective, guys. I'm just doing a kind of a tight range here between, call it 105 and 102.66. That to me is kind of where it's been stuck for the past, I don't know, couple months. Until it breaks out of that, I really don't see anything major happening with that dollar index. So we'll just leave that one for now. Your S&P, which is down 0.28% today, everything looking fantastic. Now, it's down 2 days in a row. So what? That trend does not get much prettier. At this point, if you're long, you stay long until we start to make some new lows. NASDAQ, same picture. Just looking even better. It really hasn't turned much. It's had hesitation day last Friday, and then today down just slightly, down 0.33%. But all in all, NASDAQ looking phenomenal and continuing to push higher. Your Russell is the positive one out of those big three indexes. And again, it's the one that broke out of that kind of sideways channel for the longest period of time. Then all of a sudden broke out of this ascending triangle formation right here. And now we're retesting that as we speak. So from a bullish perspective, the Russell looks great on paper, but it's not as strong as the S&P or the NASDAQ, although it still looks very good and very bullish. I've actually seen some substantial forecasts that the Russell may be up 50% by the end of the year. And I thought that was a pretty shocking statistic. Let's see what it's up so far. I think was it Tom Lee? He's some famous, I think he's some Fund Strat, one of the major fund analysis guys. What color is that candle right there? That's red. All right. So based off of that, I hear a call that the Russell could be up 50% by the end of the year. It's only up 2.4% this year. So that means you get another 48% to the upside. So we'll see how that one all pans out. I don't see the Russell getting up to 50%. Just to put that into perspective, let me zoom out here and show you where that 50% number might be. So if we look at that from where we open and get to 50%, yeah, there's no way we get to 50%. All right, so here's 50%. 50% would bring us to roughly 3,070 for the Russell at the end of the year. And again, this is a major fund guy coming up with that call. That is a level obviously we've never seen in the history of the Russell 2000. I don't see. I get that there's an expansion and people going after small caps and growth in that area, but not to that extent. That'd be just too big. All right, almost to the podium. Gold. Not really much happening here. You do have a bullish harami, really, because today fits inside of Friday's trading session. 0.76% gain today. SLV also, let me bring up SLV. I had a correction. I didn't remember how many puts I had sold on SLV. It was only 20. I thought I did 40. I did 20. So fine with me, 20. I'll be happy to buy silver at lower levels, and we'll see what happens there. But it was 33 or 35 cents I collected on that for a $22 strike. So not too bad. And podium time. Your bronze medal for the day, which actually, because it's been readjusted here, here's the number for your 10-year, was up 1.17% today. So not bad, good little pop up. And again, that trend we saw form in early December or late December, still feel like it's intact. I'm a little bit not concerned, but we kind of had this double top right here. If you go to the highs from February 22nd to the highs we had on March 18th, double top, only really a double top if it breaks this low that we achieved on March 8th. So all in all, it's okay, but it does show a little bit of weakness because it did not make a new high here to the upside for that 10-year. Current yield, 4.249. All right, and we already looked at crude oil. I won't look at this one again, but we've got a nice move up today in crude oil. I think that we'll probably challenge those peaks from last week, the 18th of March. I think we'll challenge those in the next couple of weeks. And finally, rising from the ashes like a phoenix here, Bitcoin is up 11.18% today, back to 71,130. We had this line drawn. I'm not drawing this after the fact, talking about that kind of 61,000 mark for Bitcoin. And the low point we saw for Bitcoin futures, which went back to March 20th, that low point, 61,020. Talk about getting right to that area and bouncing off. That was fantastic. Now eyes are set on the all-time highs for the futures. At this point, all-time high for the futures is 74,415. So we'll see how that one pans out. But all in all, looking pretty darn good there for our markets and for Bitcoin and all my crypto lovers. Market says, please explain MSTR. Let's bring up MSTR. Okay, please explain MicroStrategy up 21.86% today and Bitcoin up 11. Well, I think this goes back to a couple different factors. Number one is that this is one of the only pure plays, other than some of the Bitcoin ETFs, for Bitcoin. We had John O'Donnell on the other day and talking about the short squeeze potential here for MicroStrategy, which I think is a big factor. It has felt like that for the past 6 months, whatever Bitcoin does, MicroStrategy is a 2x. It's a 2x Bitcoin play. So when Bitcoin fell 8%, MicroStrategy was down 16. I mean, it almost seems lockstep. Now, why is that exactly? I can't tell you, Margaret. I don't know for sure why I'm seeing it like almost double every time Bitcoin has a move. However, I think that the bulk of the gains coming from MicroStrategy are going to be that short squeeze that if it's not happening now, it's going to be much more impactful here in the near future. So let me real quickly go to Yahoo Finance here and look at the short interest on this bad boy. Just so we can see what those numbers are. I think last time we looked, it was 20-something%. Let's go to statistics, and you can just go to, I'm at Yahoo Finance here for anybody listening to the podcast. You go to Yahoo Finance, you can scroll down here, and you'll see on the kind of middle, it'll show you the short ratio, short percent float. So right now, I'm not sure how lagging this is. It says as of February 29th, so we got a couple weeks past, short as a percentage of outstanding shares, 17%. That's pretty big. That is a very, very big short interest on this bad boy. And, you know, when you look at the history of it and you hear what happened with Michael Saylor, this company was about to go bankrupt. They were pretty much done. And Michael Saylor had this idea to start buying Bitcoin with the company. And that really has turned everything around for MicroStrategy. So I sure as heck am not going to short MicroStrategy, obviously because I'm bullish on Bitcoin. And anybody who has shorted, again, you have 21% of the float as of the 29th of February is short. That is a massive amount of short interest. And I'd like to see the trend of this, but I don't know a way to pull that up. You know, you look at their chart. If you are short on this one, you are absolutely getting crushed. Even if you just started shorting this in January, from January to where MicroStrategy is right now, it's up 321%. That's wiping out your short trade. So the exact reason why, Margaret, I don't know. And what I do know is that it seems like just about every day that Bitcoin moves, MicroStrategy is double whatever it is. If Bitcoin's down 3%, MicroStrategy is going to be down right around 6%. It happened in the last sell-off, et cetera. But I think that I personally think that the upside moves here are going to be much more exaggerated, and the reason for that is the short interest. Those people are going to get liquidated here. They're going to be forced to cover their short positions at a significant loss because this is an all-time high. So if you've shorted this, you're not in profit at any point. So that's the main reason. That's what I see there. MJ Summer, could you please advise what you think of the price of IBIT versus BTC? Is it as simple as dividing the price of IBIT into Bitcoin to get? I have no idea. These Bitcoin ETFs, there's no real rhyme or reason to me. The only one that made sense was a GBTC. So GBTC came out and said this is 1/1000th of a Bitcoin. Right? That's what GBTC is stated in their prospectus. It's 1/1000th of a Bitcoin. However, when you look at IBIT, right? So here's IBIT currently trading at $40.55. How about BRRR? This is trading at $20.17. And how about HODL? $80.54. These are all Bitcoin ETFs, spot Bitcoin ETFs. But what does it represent? I have no idea. So MJ, I don't know what to tell you there. I'm not I don't like when they have an undisclosed connection to Bitcoin. Like, in my opinion, every one of these should be 1/1000th of a Bitcoin, and every single one of them right now should be trading at $71.13, because you can see it's $71,000 per Bitcoin. So divided by 1,000, and every share should be $71.13. Personally, okay? Personally, I believe that this is all part of the illusion. I believe that a lot of these financial products are designed to somehow magically degrade and steal money from you over time. I know it sounds, sounds horrible, but we don't know all the fees that are in these things. They disclose a certain fee, but what sort of transactions are going on inside this fund? That's not really that open. They have to disclose what they're holding at certain points of time, but if I don't have a way as a consumer to track what is really going on with the price of the security, then what am I to believe? So I don't know, MJ. I don't know why IBIT is trading at the price that it's trading at and what it represents. What am I actually buying, right? In my opinion, they should make this, IBIT should be trading at $71,000 and a whole Bitcoin. Well, unfortunately, you can't buy a fraction of a share. Well, you can on some of these, and some sites will allow you to do. It's right, Oliver. It's a trap, Admiral Akbar. It's a trap. I don't get it. And they're all different prices, MJ. It's kind of crazy. GBTC is the only one I really appreciate how they did it. Again, because it's 1/1000th of a Bitcoin, but it's actually off. You can see right here, Bitcoin's trading, or GBTC is trading at $63.34. Well, if it's truly 1/1000th of a Bitcoin, it should be trading at $71.13. There's a discount that you're paying for. You're getting a GBTC, and the belief is that it's going to rally back up to parity, and someday GBTC will be exactly 1/1000th. It was in the past. It was actually trading at a premium before. Now it's actually trading at a discount. But I don't trust them. I'm not buying anything like IBIT. The only reason I would suggest IBIT is for someone who is scared about buying Bitcoin directly, not comfortable moving it and private keys and hardware wallets and all the new terminology and tech that comes with it. If you're not familiar with that, then you could buy a spot Bitcoin ETF. Make sure it's spot, not futures, because at least if you buy the spot price, you are encouraging the price to move up because you're part of the demand cycle. So other than that, I have no reason to touch them. I may in the future be trading things like IBIT simply because they'll be optionable here in the future, and I will be happy to sell options against it and collect premium and get my Bitcoin, make it deliverable. All right, let's see. Jason says, Merlin, back in the spring of 2017, you were very optimistic about XRP. But that you haven't followed me in a while, Jason. My optimism died in 2018. I still own 22,000 Ripple, I think, but I don't feel that good about Ripple. Yeah, no, I was very bullish in 2017 because it was the only one doing what it was going to do. They were the only one doing a cross-border payment system trying to replace banks and going after the SWIFT protocol. They were the only ones. And then they got all caught up. It's really all a centralized business. And then they got in trouble with the regulators. That was, of course, in 2020. But yeah, in 2018, my love affair with Ripple went away. And I was very public about that one as well. So, would you trade GBTC? No. So here's why. I'm not going to trade GBTC, and the main reason for it is GBTC charges a 1.5% fee. I can go to IBIT and pay, I think it's 0.19%. Let me make sure here real quick what the fee is for IBIT. But GBTC is charging you 1.5% transaction fee, whereas I can go with some of these other ones and not pay that fee. Well, pay a much smaller fee. So let me quickly look here. Where's my expense ratio? Expense ratio, 0.12%. So that's cheap. If I look at GBTC, you're 1.5. That's a significant. I mean, it may not seem like that much, but remember, I might be buying 100,000, 200,000 at a time. So actually not going to. I wouldn't buy GBTC. You know, if I wanted to buy Bitcoin, I would literally go buy Bitcoin. I'd go to Coinbase, I'd buy Bitcoin, I'd move it to my hardware wallet and be done with it and just sit on it. If you want to actively trade the swings, right, the ups and downs for a week or 2 weeks, then yeah, I guess GBTC is okay, but I would use IBIT. I would use the most liquid of the ETFs out there, and IBIT is the most liquid of the spot ETFs. Let's see. Just put any of those ETFs on TradingView, divide by BTC USD, and you can see the ratio. Okay. But is it the thing there? You can see the current ratio, Tom, but is that declared by the firm as a locked ratio? Because that might just fluctuate over time, and then it loses its value. It's not a fixed ratio, right? If they say they're going to be 1/110th or 1/1000th, then that's the number I'm striving for. I can divide any number by any number and get a ratio, sure. But does that ratio remain constant? That's the problem. LTCN? Are you in the crypto world, Margaret? Are you asking me about Litecoin? Oh, the Litecoin Trust. For those that may not know what Litecoin is, so Litecoin is, if Bitcoin is digital gold, then Litecoin is digital silver. That's the way it's been built up. All that happened was a guy named Charlie Lee, who was a developer. I think he actually worked for Coinbase, if I'm not mistaken, but he was just a techie. He took the Bitcoin source code, which is open source. He took that and he basically looked at it and said, it's too slow. 10-minute block times is too slow. And there's not enough out there. There's, only 21 million Bitcoin will ever be created. And he said, okay, I'm going to take this code and I'm going to make the block time 4 times faster. So the block time for Bitcoin is 10 minutes, Litecoin is 2.5. I want more of them. All right, we're going to multiply that by 4. So instead of 21 million Bitcoin, you have 84 million Litecoin. So you have much more supply, 4 times the supply. That's basically it. Do I like it? Yeah, I do like it. I'm a fan of Litecoin. I had a huge position in Litecoin until Celsius stole all of it from me. And actually, I had like 380 Litecoin. I think now I only have like 60. So I'm a little disappointed there because I had a pretty big position in Litecoin. But yeah, I think it's okay. I think it's, as time goes on, I think you're going to have Bitcoin. I think Litecoin will probably slowly lose its luster a little bit. Let me just bring up Litecoin over here. But for now, I like it. I think it's a decent project. It doesn't have much of a development team on it. It's designed predominantly to be a payment network. So it's really trying to do what Bitcoin does, just faster and more supply. Other than that, I don't know. I would, if I had my choice between Litecoin and Bitcoin, I'd just buy Bitcoin. You guys all know my thought on that one. Let's see. HODL is staying at 0.00115 plus or minus. Okay, the others are pretty consistent with. Well, and that, the reason for that also, Tom, is they've only been around 2 months, right? Give over time. Let's see if those fluctuations deviate. And again, I think that what's going to happen is fees are going to be in there somehow, extracting value out of this. I mean, there's definitely BlackRock is going to want to make more than 0.12% on their Bitcoin. But yeah, from an active trading piece, I think they're all fine. Go with the most liquid spot Bitcoin ETF. If you are a long-term holder and you're fearful, I would go with IBIT because it's the cheapest and got the big BlackRock name behind it. All right, let me wrap up here and show you just what happened on the economic calendar. So last week, the existing home sales were great, right? Really good numbers. Today, we got another housing data point, but not as good. New home sales were much worse than expected. They were expected to go from 664,000 up to 675. Came out at 662. So not only did they not go up, they actually contracted and went down. Now, it wasn't a big contraction, but it missed expectations. We'll see how it pans out. Everyone is really optimistic on this one because we'd seen a couple months of growth, but back at 662. For tomorrow, what do we have? You've got durable goods orders. You got Case-Shiller Composite 20 Home Price Index, which has curled up recently, which is nice. You see that we were negative for about 4 months, and all of a sudden, start to see home prices increasing in value yet again. For those of you who own homes, this is good news. They're expecting a 6.6% increase in the Case-Shiller Composite 20 Home Price Index. You also have Consumer Confidence and Richmond Manufacturing Index coming out for tomorrow, and that is your economic calendar. The earnings calendar doesn't really have much going on. I told you this. So there's 2 shows. Well, tomorrow's show will be an interesting one. As you guys know, Donald Trump is on the verge of becoming a very wealthy man. And who knows if he's wealthy at all? We just don't know. His Truth Media or Truth Social Media, whatever that thing, is going public tomorrow. And it's going to be under his initials, DJT. And we'll see how that IPO performs. We'll see how that one goes. Of course, it's not really an IPO. It's a SPAC acquisition from Digital World, which was DWAC. We saw DWAC soar. Tomorrow, that goes public. So I'm probably going to do a show on that and kind of peel apart that onion a little bit to see what really goes on behind the scenes. We'll talk about that one. And then later on this week, DJT. I love that one. And then probably on Wednesday or Thursday, I'm going to do one on... I need to do some research, but looking at algorithms and AI for trading, as I know a lot of last week's show. I didn't do that last week. I talked about DWAC, but I didn't talk about the... Oh, what happened with the pictures and the outlines? I was just too busy today to do it. I need a production team. Thank you, Chio. And for those of you who did comment on that, thank you. Most of you were positive on it, and some were like, no, I don't like it. That's okay. But I will do it when I have time. And for those who might be wondering, I did on Friday's show kind of a new idea. I'd like to do kind of like a Sports Center thing where I just kind of go topic. And I got them all kind of clear cut for me. We'll see how that one does. Yeah, that's the big question, Margaret. Does AI trading work? I'll do a little bit of research on that this week and do something later on the tail end of the week. So that's going to do it for me. Again, thank you guys for the questions. Questlock, thank you very much for that one. Scott and Tam as well. I hope I answered to your satisfaction. If you guys have questions or things you want me to cover, you can email me at tradermerlin@gmail.com or just go down below any of the YouTube videos. Type in your comments, questions, suggestions, things you want covered there, and I will get to those in an upcoming show. So take care, everybody. I will see you tomorrow. Take care.